going to, of course, be professional and read his professional bio. And at the top of his bio, it says brief bio. So I know Mr. King has much more information in his bio, but he's condensed it because he is a humble gentleman. So he's condensed it for this morning. Sidney King is the president and CEO of Commonwealth National Bank here in Mobile. Before returning to Commonwealth, Mr. King served 12 years as Kansas City Regional President for Liberty Bank and Trust, 9 years as President and CEO at Commonwealth, and 5 years as President and CEO at First American Bank in Jackson, Mississippi. His banking career started in 1982 at Harris Trust and Savings Bank in Chicago, Illinois, where he successfully completed their formal credit training program. Mr. King then served 10 years in various increasingly responsible lending positions at the Independence Bank of Chicago and its sister institution, Drexel National Bank. Prior to his banking career, Mr. King was employed for 5 years with a medium-sized Chicago-based public accounting firm. During this time, he earned the accreditation as a certified public accountant. He is a graduate of DePaul University in Chicago, where he received a degree in accounting. Mr. King has served in various leadership positions on numerous civic and community boards throughout his career. And I do personally know that Mr. King continues to serve in the Mobile area as well. Within his time of returning back to Mobile, he has jumped right back into the community involvement arena, and he continues to give back and serve. So it is our pleasure this morning to have him with us and to also, of course, bring that experience, knowledge, and expertise to the table. So without any further communications and ado for me, I will pass it over to Mr. King, CEO and President, Mr. Sidney King, CEO and President of Commonwealth National Bank. Mr. King, the floor is yours. Welcome.
Well, Mr. King, thank you for that introduction. I like saying Mr. King to Mr. King. No relations, but same plantation somewhere, I'm sure. So anyway, I can't help it. It's a pleasure to be out this morning. As Levy mentioned, this was something that the Black Chamber wanted to do. As the Black Chamber is reestablishing here in the Mobile market, they are really making some good headway and contacts and communications within the community. So we want to get on board with the Black Chamber and help the Black Chamber really serve the needs of the African American community here. It is, as Levy would say, it's a chamber for all people with a focus on serving the historically underserved African American community and growing that African American community here in the Mobile market. And as we say at Commonwealth, we want to help make wealth common in this African American community here in the Mobile market. So this morning, as we just shared, Levy and I had shared and talked about putting a presentation or a program on, we wanted to do something during Black History Month. This is the month that they've set aside to honor African American accomplishments. And we wanted to honor that and be able to share some information within the community that can help us grow. And as I was saying earlier, help make wealth common in the African American community here in the Mobile market and beyond. So when we have these financial education opportunities, we want to share some things that can help individuals do better financially, better take control of their finances. And many people, when you have a financial education opportunity, a lot of people, because of pride, they don't want to show up. So we encourage people that, if you know someone that has financial challenges, and we all do, take a part of it, get the information so that you can share with that individual. So I'm going to actually put a PowerPoint presentation together. I know, don't let the snow on the rooftop fool you. I can do some of the young stuff too. I'm learning. My daughter taught me. But anyway, let me see if I can share this. Yeah, that's there. Something slides. Is that it? Okay. Now, the one thing I didn't do, I tested it earlier and I didn't figure out how to go back. No, that's all going forward.
Mr.
So,
King, if you look in the very bottom left corner, there's a back arrow. Do you see it? The next arrow to the left of that one. That one. Yes, perfect.
You got some old pants in there on the bed if you don't want to put them on just yet.
okay. And I would say that, if you're not, if you would mute your phones while we go through the presentation here, that would be helpful. So the topic for this morning is mind your money. Um, we could all use a little bit more, and they say money can't buy you happiness. You've heard people say money is the root of all evil. And I think Les Brown put it best. People who say that money can't buy you happiness, they should, I personally like to find out for myself, but he says typically the people who say things like that just don't have any. And what we want to do again is make wealth common here in the African American community, and providing information like what we're sharing today helps us put some things in place, because a lot of people are doing okay, but they need a little tweaking. And some of the things we're going to share today maybe will help with that tweaking to put them in a position to get their finances back online. And that was me. But the topics we're going to discuss today, basically how to improve your credit score, because that's a challenge that a lot of people have. The credit score is more of a debt score, but we're going to talk about ways to improve that, how to work with the money you've got. Of course, we all like to have more. They say the richest man, ask him, how much money do you want? He said, well, just a little bit more. We always want to do better. And then how to build a great banking relationship. So I started out with this statement: there is no chance, no destiny, nor fate that can circumvent, hinder, or control the firm resolve of a determined soul. There is no chance, no destiny, nor fate that can circumvent, hinder, or control the firm resolve of a determined soul. Now, I say that typically for two reasons. The first, it makes me sound intelligent. That's my favorite. But then also, basically what we're saying here is that anything you set your mind to accomplish, if you're willing to do the work, you can accomplish it. You can do anything that you set your mind to accomplishing, as long as you keep trying, don't give up, or start blaming somebody else. Because when you do that, you're done, you're failure. So you're never a failure until you stop trying, give up, or start blaming somebody else. But as long as you're willing to do the work, you can accomplish any goal that you set your mind to accomplish. So the first topic we were going to talk about, improving your credit score. And I put down there, discipline is the key. Because if you're ready to improve your credit score, if you want to do some things to improve your credit score, it's going to take discipline, because your credit score did not deteriorate overnight. And it's not going to necessarily improve itself overnight. It's going to take some discipline and doing some things that's going to help you to get back on track, to get your credit in the condition where you want it to get to. And again, if you made some mistakes in the past, draw a line in the sand, forgive yourself, make a decision to move forward. But discipline is the key. So things that affect your credit score, as I mentioned earlier, credit score is nothing more than a debt score. If you have no debt, you have no score. And the credit score is kind of an indicator of how you manage your finances. It's about more discipline. And when you come into the bank, we're going to look at that credit score, because it does give an indication of your history and how you've managed your finances. But it's not the only thing that we look at, because there are some other elements to a person's credit worthiness, their ability to service debt. And I will tell you, this is, my opinion from things that I have seen in the past in the African American community. I think there are still some biases in the credit scores where we see those credit scores a little bit lower. I can see someone from the majority community that's filed bankruptcy and still have a 700 credit score. I can see someone in the African American community that pays everything perfectly, and they've got a 640 score. The average credit score is 700. Which, when we look at the scores in the African American community, rarely do we see 700 scores, and very seldom do we see 800 scores. So the way to improve your credit score is, that's a simple no-brainer: pay on time. As I say here, earlier is better. What a lot of people tend to do is when you make a loan, you have a grace period. And what they tend to do is look at that grace period. If my payment is due on the 1st, I've got a grace period to pay it on the 15th. Well, they use the 15th as the payment due date. That payment is starting to show late payment history, but then something happens. They put the check in the mail on the 10th and it doesn't get to the bank until the 16th. Now there's a late charge assessed to it, because that grace period is to help you account for maybe that slow mail, or something that may come up that delays that payment getting to the. But if you pay on time on that due date, use that as your pay, you're going to have a better opportunity to not get those late payments and to keep your credit, improve your credit score. Because when your credit score goes down, it affects your credit. It affects your bills. That when you go out and apply for credit, you pay higher interest rates. It affects, in some instances, your ability to get a job. It affects your ability opening accounts. Your insurance costs are higher. So that credit score is important to help improve that score and to show a higher score. If you go out and want to buy a house, if you got typically a 640 credit score is what you need to start. If you got a 680 credit score, you can do a little bit better, a 700, 720. I think 750 is the next level. Depending on where that score is, you get a better lower interest rate, and it better makes it better for you in doing a lot of things. So working to get that credit score down by paying your bills early, or paying it on time. Early is better, I say. What I tend to do is I get paid twice a month. I know those dates that I'm going to get paid. When I look at my bills, I kind of schedule them out to see when those payments are due. I got a bill that is due on the 5th of the month. I know that if I look at all the bills that I've received that are due by the 1st of the month, and I pay them when I get paid at the end of the month, I don't have the money left to pay the bill that's coming up due on the 4th of the month or the 10th of the month. So you got to plan to pay those bills with that end of the month paycheck. And then you look at what's due between the 15th and the end of the month and make sure those bills are paid with the end of the month. The 15th paycheck. If you wait and say, well, this bill is due the 28th, I got paid on the 15th, so now I'll pay that bill out of the payment when I get paid on the 1st or the end of the month, you run the risk of running late. I would tell you not long, last, November, we mailed our checks, mailed our payments, and I still do some in mail. Most of them we're paying now online, but there are some that we still pay by putting them in the mail. We put the bills in the mail on the 30th of the month, actually the 27th. Of November, those payments did not show up until the 6th of January. Now, if we didn't monitor our credit, monitor our bills, watching the checking account to make sure when those bills are cleared, those bills would have been late. But what we did is we went online, paid them online, and then when the payment came in January, it basically was a doubled up payment. But you got to watch those bills, and you got to manage that checking account because it makes a difference. Other things that affect your credit score, and I go on tangents, so I'm going to speed it up a little bit. But other things that affect your credit score is the length of time your card's been open. If you've got a credit that you started in 95, I can say that because I'm older, but that credit card is the length of time that card's been open. It helps my credit score by having that card open. What people a lot of times will do is you get these applications for no interest for 60 days or 6 months, and they keep flipping those cards, paying off one card with the new low rate cards, thinking they are helping themselves by not having a lot of interest to pay, but it's affecting their credit score because every time you open that new card, it brings your score down. Every time you get that new app inquiry, it has a small effect on your credit score. So those are things when you keep applying for new applications and new accounts over and over and over and over again, it affects your score. I went to the store, and again, I use myself in stories sometimes, but I went to the store and I bought some to get some pants. And they said, well, if you get our new credit card, you'll get a 20% discount. You get 20% off. So I went on, applied for their card, got the pants. When the bill came, I paid it off because I was going to pay, cash for it anyway. I got the bill, I paid it off. My credit score dipped 30 points just for that one new application, that one new account. Now it recovered in about 4 or 5 months. So, it has that slow effect, but it affects your score. If that had been the time I was going to buy a house, my score is going to be much lower at that point. So managing, and that's another thing. My wife is a realtor, almost 28, 29 years as a realtor, so very experienced at what she does, just got an Alabama license. I do these shameless plugs and I can't help myself. But she explained to her customers, don't take on new credit when you're in the process of buying a house, because you take on new credit, they check your score just before you close. That score has dipped below the 640 or below one of the trigger points. It's going to affect the rate that you're going to be able to get. So don't chase credit cards. Don't put all those applications in. And when you do have credit outstanding, because it's hard to not have credit outstanding today. I know we live in a credit society, a credit availability society, and a credit usage society, but try to keep those balances below 50%. So if you got available credit of $10,000, try to keep the outstanding balance below 50%, because that's going to trigger a better score for you. If you can keep it below 30%, that's going to be another trigger that keeps your score, gives you a higher credit score. If you get it at 90%, that's going to affect your score negatively. So work on, when you have those credit cards, try to keep the numbers down, and keep the utilization down, because, the number one cause of money management problems is that credit card. I remember years ago when in the Flintstones, Wilma Flintstone, they got their first credit card, and she and Betty did charge it. And people, when you got that credit card, you don't see the cash that you're using, and you spend more. You use it more, and you just spend it. So try to avoid using that card. Use it for your necessities. Use it for things that you need, but then pay it off. Try to manage that card, because that is, like I say, that credit card hurts a lot of people. If you have a credit card, try to use it responsibly. If you've gotten, well, I'll get to this a little bit later, but if you've got a card outstanding and you just need to get the payments down, work on getting it down. Because, as I was saying there, ideally you use your credit card to pay expenses and then pay them off. Most of your cards have online access. You can go online and you can make a payment. And so I'll use the credit card to buy, gas, buy groceries. I mean, I use my credit card for everything, to buy everything, because I get points when I do that. But I also, within a day or two, once it hard post to my account, I'll pay it from my checking account. So I'll pay it back down. So you'll see activity going in, you'll see the payments coming back. And so I'm not paying any interest on that. The credit card company is making a little bit of money from the interchange fee, so they are happy with you continuing to utilize that. The stores want you to use the card because you spend more when you use the card. But if you do it responsibly and manage it and pay it off, you will stay in a better position. And I kind of throw this one in there: avoid ID10T purchases. ID10T purchases, when you go into the store, they put these little things up there and you see them. Ooh, I gotta have that. I need to have that. You don't really want it. You didn't go in there planning to buy it, but it's just right there, and you say, I gotta have it. How many things have you bought over the years that you utilize once, twice, or not even use it? It's just sitting there in your closet because it was such a good deal when you saw it there. Those ID10T. Now, I say ID10T. That's a kind of a technical term. If you look at that, and you see that one as an eye, you see what they're really talking about. Okay, do I see smiles coming in? Anyway, so if you see something that you just gotta have, take a picture of it, put it on your refrigerator, And if 2 weeks from now you still got to have it, then maybe it's something that you really want and you could utilize. But don't rush out there and just make those impulse purchases, because when you make those impulse purchases, it's gonna put it on that. You're gonna put it on that credit card, and all of a sudden you don't have enough funds to pay it off, and that balance starts to grow. And boy, once it starts to grow, and I'm sure many people can attest to it, once it starts to grow, it's hard to get it back down. It's hard to get it off. And when you look back at the things that you used to build the balance on those cards, just say, why did I do that? I didn't need to do that. It wasn't necessary. It wasn't something that I need. Another thing that I recommend, annualcreditreport.com. So annualcreditreport.com is an area you can go on there and order a credit report once a year from each of the 3 major credit reporting agencies. So you can check your credit, 3 times a year if you did it every 4 months from the different credit reporting agencies, or you can just check all 3 of them once a year. But I would say periodically you want to go out there and check your credit report just to see if something new is showing up out there. Make sure, you'll give you a chance to get ahead if there's some identity theft. Excuse me. I once had a situation on my credit report where, I was shown 30 days late for, what was it? A Firestone bill. I had a Firestone credit card, but I hadn't used that card. I hadn't used it in years, but I had one. Well, my son also had a Firestone credit card, and his wife went to Firestone, to get some tires, and just mentioned the name. They pulled up my report, my card, and put the bill on my account. We were able to go back and get it fixed, but if I hadn't done anything, I hadn't looked at it, I've got this bill out there that I didn't know existed, and so I hadn't paid it, and it's just continuing to go delinquent. They fixed it, put it on my son, to remove the account from my credit history, but you want to check it periodically just to make sure they're not putting things out there on your credit report that can negatively affect your score, because when it gets out there and it's out there for too long, it's hard to kind of go back and get it corrected and get it fixed. And again, the fact that it will affect your credit score may put you down below that next level when you're going to buy that house and get you a higher interest rate, or no rated or no loan at all. So check it periodically. Those are things that can help you manage that credit score and improve that credit score. Okay. I put this picture in here because some people will look at it and say, about the credit report, but my credit score is just so bad, there is nothing that I can do. The thing here on this picture, this tree fell years ago, but it never gave up. And look what it grew into and what it has grown into. You can do the same thing. If you had an issue some time ago, you messed up years ago, you got caught up in a situation years ago, you just don't give up. Keep working at it, chipping away at it, utilizing some of the things that we talked about here today, but you don't give up. You can recover, and you can build that great credit score. You can build that 700, 800 credit score. So just don't give up, and look for solutions on how you can fix the challenges that may have appeared and occurred in the past. Okay. Next topic we were going to talk about was work with the money you got. And I guess we'll open up for questions and answers at the end. So if you've got questions, kind of jot them down to those toward the end. Okay, so the next topic is work with the money you got. Okay. And people go, here we go talking about budgeting. Everybody's always talking about budget. We talk about some budgeting tips here because it's important. There's a statement: if you fail to plan, you plan to fail. If you plan things out, you're in a better position to get things accomplished than you would be if you didn't plan them and you didn't, set things in motion for it. What a lot of times people will do is we hear something happening, then we start preparing. But if you prepared yourself and that budget is preparing yourself, so when emergencies or something comes up, you're ready for it. If you don't have that budget, you're reacting to it. Having that budget is being more proactive. So calculate your monthly income, and pick a budgeting method that works for you and monitor your progress. One I was going to talk about here is what I call the 50-30-20 rule as a simple budgeting framework. Now, a lot of people talk about, here we go talking about that budget. You know, I felt the doubt coming through the, through the computer. So this was something that my pastor said not long ago. He said, let your faith roar so loud that you can't hear what doubt is saying. So let your faith roar so loud you can't hear what doubt is saying. So if you have some doubts about, being able to fix your credit, being able to improve your credit score, being able to develop and work with a budget, if your situation where, boy, there's more month than money, don't let that doubt stop you from moving forward. Don't let that doubt stop you from believing that you can achieve your goals. So let your faith roar so loud that you can't hear what doubt is saying. So I mentioned 50-30-20. The 50%, of your income, and this is 50% of your after tax and after tithe income. Now, the tithe is something that I advocate, but that's, your personal situation. It's just what we do. So you're looking at 50% of your after tax because you're going to pay the taxes anyway. That's gone. Uncle Sam is going to take his. And so you're working with what you have left. 50% of what you have left, should go to necessities. Your groceries, your housing, your basic utilities, transportation, insurance, the minimum credit payment, childcare, you got things that you have to do. So 50% of your income should go to those things that you have to do, have to pay for. And again, these three areas are interchangeable. There is no priority where this should be the priority, the next one should not. These are the structure that you should work toward accomplishing, so that eventually 50% of your income goes to your necessities, 30% goes to your wants, and then the other 20% goes to to things that you can do. Okay, to growth and retirement. So the 30%, typical wants, eating out, it's good to eat out occasionally. It's good to, eat out, but you want to, it's more cost effective to cook and eat at home. Eating out can get expensive. Buying a lot of gifts, traveling, entertainment. And there's a question if gym membership is a want, because in some cases it's a necessity. But these are things that, you want to accomplish, you want to have, you want to, be able to do and utilize. Like going out to a good restaurant every now and then. My wife's a great cook. She's become a solid, great Southern cook. But every now and then, you want to give her a break and go out and bring something in or eat. But, you got to do those things that you want to do, because the budget, if everything is going to necessities, you're not happy with working that budget. And if it's something you're not happy working with, most likely you're not going to stick with it. So the goal is to set a plan, set a goal to get to the point where 50% is going to your needs, 30% is going to your wants, and then the 20% is going to savings and debt repayment. Now, one thing that I would encourage everybody to do, if you don't have one, start an emergency fund. Dave Ramsey, this is one of the things that he always talked about. And I personally agree with most things that Dave Ramsey said. There was one thing that Dave Ramsey said that I don't agree with, but he would say that your bank should be a credit union, and that's not true. Your bank should be a bank, and I won't go off on the tangent about that. I'll just leave that alone. But your bank should be a bank. So start an emergency fund. Put aside $500 to $1,000 in an emergency fund. So when something comes up, you don't have to go into your budget, into your operating funds, your household expenses to pay for it. If you blow a tire in your car and you got to get a new tire, and they tell you, well, you got to get two, you don't need just one, because you want them balanced. Having to take those funds out of your household budget disrupts things somewhere else. But if you have set aside that emergency fund, and it may take you a minute to build it up, to get to that point, to build up that emergency fund, but set a goal to put some funds aside to build up and develop that emergency fund. If you have a 401k on the job, contribute to that 401k. You think about, many places will match 50% of your contribution. Some places will match 100% of your contribution. So you doubled, if they're matching 100%, that's free money. And people will say, well, I'm living paycheck to paycheck, I can't afford it. What you will see is, if you take $100 and put toward the 401k, that becomes $200 when your employer matches it. It's taken out of your paycheck before taxes. So instead of $100 impact on your take-home pay, it may only be a $70 impact on your take-home pay. But that $70 from your take-home pay has increased your 401k by $200. That's free money that's coming to you. And if it's in the right kind of retirement fund, it's growing. And I'll tell you, where the stock market has gone over the last few years, 401ks have done extremely well. So if you can contribute to that, 20% of your funds, some of that should go to a 401k. There are some debt numbers that you have that you want to, that are kind of troubled debt. You want to, pay off a little bit more toward that debt to get to the point of being debt free. You want to save some money for your retirement, and every now and then you want to do something for you. There was a book that I read years ago, one of my favorites. It was called Rhinoceros Success. A rhinoceros sets a plan, sets a direction for itself, and it charges at its objective, and nothing can stop it, because it's got that 6-inch skin, bullets bounce off of it. So a rhinoceros charges for its goal. And whatever we do, we should be charging toward that goal, laser focused on accomplishing that goal. But then every now and then, they say with the rhinoceros, it has to stop and take a mud bath. We have to stop and do something for ourselves. And if you're doing everything and there's nothing for you, again, we lose objectives, we lose goal, we lose faith, and we stop doing it. So in that budgeting plan, set that budget aside so that it's something that can work for you. And there are other budgeting methods that are out there that are available that can be utilized. There are people out who are financial planners. They can help you with some of those budgeting plans and some of those ideas on investment goals. But take advantage of those and utilize some things for yourself to help improve your financials. Now, this was an affirmation. I call this a debt-free affirmation. It says, in the name of Jesus, debt, you're out of my life. I'm out of debt. My needs are met. I got plenty more to put in store, and I'm debt-free. Just like he delivered the man who lost his axe, he'll deliver me. I thank you, Lord, for my debt-free anointing. You take that, put it on your refrigerator, put it on your mirror. That's an affirmation to help you, because if you follow and keep going with those affirmations, your focus changes. So when you're working toward becoming debt-free, those impulse purchases, they pop up, things you can't help them. You can't stop them from popping in your head, but you can make a decision. Like I said, you can't stop a bird from flying around your head, but you can stop them from making a nest. When you've got your mind focused on becoming debt-free, on working toward that debt freedom, you see those impulse purchases as they pop up, but you quash them and you push them back and say, nope, not doing that. I'm working toward debt freedom. When I first heard this affirmation, they talked about just like he delivered the man who lost his axe. I had to go back and search in the Bible to see where that was. There was a situation where the man had borrowed someone's axe, and then it fell off in the lake, and he lost it. And back then, if you borrow something from someone and you don't return it, they had got dire consequences. So that axe, metal axe, floated back up to the surface. So he was able to return that axe to the man who borrowed it from. So if God can do that for him, he can deliver me from my debt-free, from my debt burden. So this is an affirmation. We can get these to you. If you see any of these that you like, you can always email me at sking@ecommonwealthbank.com, and we can email those to you. sking@ecommonwealthbank.com. Let's see. I'm getting close toward the end. Okay. The last section we talked about was developing a good banking relationship. because there are so many people who are unbanked in the world today. And when we go into the African American community, it's about 46% of African Americans are unbanked or underbanked. If you look at people who don't go to get more, any beyond a high school graduation, the higher percentage of unbanked or underbanked, and people based on your income level, there's a higher percentage of unbanked or underbanked. So the reasons that people are unbanked or underbanked, you made a mistake in the past and you're put on basically the no count list. You've overdrawn your accounts in the past, you've got some chronic overdraft history, and through the check systems or something, you show up on a list. And so when you go to the bank to open an account, you show up on that list and they refuse to open the account. We've got at Commonwealth, we've got a second chance account where we can help those individuals get back on track and get back into banking relationship, because it's so important to have that banking relationship. Some people just don't trust banks. In the African American community, one of the reasons that there are so many unbanked and underbanked is because their parents didn't have banking accounts, or grandparents didn't have banking accounts. Banks just weren't for us. And we've had history with the freedom, the banking history in the past, that has created challenges for the African American community, because we didn't have a lot of leadership roles in those banks and we were taken advantage of in the past. We worry about the minimum requirements. Unfortunately, there are just no free checking accounts anymore. Government intervention into a business matter created that. And what they did is, through the interchange fee that the big box stores paid for when you use that debit card at the bank, the big box companies were paying part of that interchange fee. It didn't cost you anything as a customer, but the big box companies complained to the government. Government said, okay, banks, you can't charge this fee. This is the fee you need to charge. Well, that fee was less than the cost of providing that service. And the big box companies got a $20 billion boost with the decision that the government made, and the banks had to make that up somewhere. And so the free checking accounts kind of started to go away. There are still a few that you can get here and there. There are some minimum balances that you can maintain to avoid the fees, but unfortunately, in many instances, those minimum or free checking accounts are the thing of the past. But people, I don't want to pay fees, so they don't have banking accounts. They got debt collectors that are looking for them because the government can always, the bank's information is open to the government, or the court systems can send a levy or a lien or garnishment to those accounts. So people who have messed up in the past, to avoid those debt collectors, they don't have a banking account, a banking relationship. And then, it was surprisingly young people, millennials, the statistic says 33% of millennials believe that they don't need a bank account yet. So a lot of people are just using credit cards, using Zen or Venmo or those different apps, and they just don't develop banking relationships. But it's very important, in my opinion, that you have those banking relationships, because when you're developing those banking relationships, you're learning about money discipline. Let's see, the next, I got that. That slide was out of place. See, I'm still working on this. This should have been just before that, but that's okay. We got started on the next one. This was a statistic I went out and found on the internet, and it showed if you make less than $40,000 a year, you're 14% typically unbanked, 23% underbanked. If you look at the high school degree or less, 12% unbanked, 21% underbanked. But when you go down looking at by race, when you look at the Black population, 14% unbanked, 32% underbanked. We've got to develop those banking relationships, because with a banking relationship, that's where you learn. Without a banking relationship, you never learn the discipline of money. We have a lot of customers who will, on the third of the month, when they get their government checks, They come in and they cash those checks, take out all those funds. They got somebody that gave them a ride to the bank. They got to pay that person for giving them a ride. That person then takes them to different places so that they can pay their utility bills and their other bills. And they pay that person for giving them that ride when they could have just written a check. If they had a banking account, or today set it up on auto debit so that it automatically debits their account. They don't have to keep running around to the bank, because that person never learns money discipline, because all they're doing is getting the cash and passing it on, and then whatever's left, that's what they live off of for the month. They don't plan it, they're just existing. And I will say that person, they never learn the discipline of money. And without that money discipline, all they can teach is poverty to their children. And we want to break that generational curse by helping people to develop good banking relationships, good money discipline, and with that money discipline, teaching their children the right way to develop, prepare and develop credit histories. My first bank account, I was actually tricked by my grandmother to start that bank account. She took all the granddaughters. There were 6 grandchildren at the time. She took the 3 granddaughters on a trip to California, and the next year she was going to take the grandsons. So we started saving money. We would give her, a nickel, a dime, a couple of pennies every Sunday. She saved it up, and eventually it got to the point where, and she would add to it. Eventually it got to the point where she put it into a savings account back in the old days with a passbook savings account. We never got that trip to California as the grandsons, but when I turned 18, she gave me my passbook, and I had $1,066 in the bank. Now, $1,066 doesn't sound like it's that much, but back then you could go to the movies, buy popcorn, candy, a drink, and have a dime left over for $1. So that was a lot of money back then. You know what I did with it? 1970 Buick Riviera, 455 engine. You think about pushing the gas and it's taking off. But anyway, being able to start saving and have the children to understand developing banking relationships is only going to help them prepare financially down the road. So with that, I talk about dating your banker. Banking is a relationship-oriented business. You get to know the people who are part of the bank, they get to know you. And there are situations that may come up that by having that relationship, it helps you to avoid challenges. If we know you and, we're going to do things that we can to work with you. We understand you're a loyal customer. We're going to work with you. But if we don't know you, if it's a new relationship, typically questionable check comes in, do we pay this check or return it? Most likely, if we don't know you, we don't have that relationship, it's going to be returned, because we just don't know how you manage your finances. We don't know if this is a new account that you've just opened up only to overdraw it. You're going to be a chronic overdraft person. But having that relationship, we're more willing to work with you. You've got a situation coming up, hey, I'm going to be running a little bit late, or I had to pay this bill, but I don't get paid until a certain day. We're going to work with you. But that's developing that relationship. Because as I would say, bankers are some of the smartest people you'll ever meet. If you get to know us, we've experienced a lot of different situations from a business standpoint, starting a business, challenges that you face in developing a business. We've experienced a lot of that. We may be able to provide some advice that can help you avoid some pitfalls, or there may be some opportunities that you didn't think about that we can provide you with some advice that may be beneficial to your business, to the advancement of your business. So get to know your banker, and I say date your banker from a strictly platonic relationship, but get to know them, let them get to know you, and you have a much better opportunity, much better banking experience. And, I have to throw my shameless plug in here. If not now, when are you going to start doing things to take control of your future? It's up to you to manage your financial future. No one else is really going to do it for you. There are individuals that will help, that are willing to do things to support you, that are willing to provide advice to you, but it's you who have to do that for yourself. Like when they talk about in faith, the woman with the issue of blood, Jesus said, it's your faith that has healed you. When you do things, it's your faith. If you believe in you believe in yourself, and you're willing to do the things necessary to accomplish the goals, better chance of you getting those things accomplished. If not you, who's going to create that legacy for you, for your community, and for generations to come? You've got to start doing things for yourself, for your family, for your community. If we're going to build that next Wall Street, developing that solid banking relationship, because if not Commonwealth, who's ready, where you're going to find a bank that's ready, willing, and able to empower the Black community in Mobile and to make wealth common in the Mobile community. So start your Commonwealth account today and bring a friend. And with that, I open up for questions.
So if anyone has, first of all, thank you so much for that amazing and informative presentation, Mr. King. I actually have some questions based on what you shared, but I would like to first see if anyone who is in the audience, I guess for lack of better words, has any questions. If you have any questions, you can type it here in the chat. I'm just going to put the word here in the chat. Please just type your question in the chat if you have any questions. All right, don't let me hog up the time because I definitely have a few. Levy, were you going to say something?
You're still muted, Levy.
You're muted.
Sorry, everyone. I do have a question. I'm sorry, and I'm a really bad typist, so I apologize. Sidney, again, listen, phenomenal presentation. Listen, it was, I'm sure it was much more comprehensive than many people probably thought they were going to receive on this morning. So thank you for that information. You mentioned something earlier that I would love for you to expound on. You mentioned that Dave Ramsey said that your bank should be a credit union. Can you expound on that, please, sir, if you don't mind, for everyone?
Okay. Dave Ramsey, he's a phenomenal individual. He has done a lot of things to help people improve their finances, to get out of debt, to build wealth. He started the discussion with the emergency fund, but they paid him to make that presentation for a credit union. A credit union today is nothing more than a community bank that doesn't pay taxes. Used to be a part of a credit union, you had to be affiliated with the organization that the credit union represented. And that's how they started out and got their tax freedom status. If you want to grow a business, you need a bank. Credit union is limited to what they can do from a business development standpoint. It is more of a consumer organization. At times they can give you a little bit better rate because they don't pay taxes. They got that tax advantage, and they are lobbying as a credit union to get more abilities to provide business, support. The bankers are lobbying to stop them from getting that business support because of their tax-free status. I say, give them the full abilities and availabilities that banks have, but take the tax freedom away, put them on a level playing field, and let's all go through this together. Because our objective is to help people to get the finances that they need. But with a credit union, they're just an advantage that they have from that tax-free status, but they're limited if you want to grow to a business. They're more for consumers. And Dave Ramsey was paid to say that.
Great question, Levy. Anyone else have any questions for Mr. King?
Yes, it's on you, Maria.
I don't have a question, but I would like to thank Mr. King again for the great and excellent presentation this morning. And I would ask if the chamber could make this public and shareable, because there are so many people, especially our people, who need this information. Great presentation. If we can, please, let's make it shareable so that we can spread this information across social media. Thank you again.
Thank you.
Excellent suggestion, Carlos. We have recorded it, or are recording actually. So yes, we will make this shareable. And if you all have any contacts or friends or family, if you're on our email subscription list, we will send out a link where you can access the recording. If we don't post it on social media, maybe post it on social media. I do
Another,
see. Go ahead. I'm sorry, Mr. King.
and another thing, what the Black Chamber is doing is trying to make access available and information available to the African American community. This is not going to be the last time that we do things like this. So go out and tell your friends about the presentation that was made through the Black Chamber, and they're going to do it again. So when they come back again, make them sure that they are be a part of it. We want to use word of mouth advertising for the growth of the Black Chamber, and of course for the growth of Commonwealth National Bank. That word of mouth advertising helps us all grow. And as these entities, these organizations grow, it is going to impact the African American community in this market. We've got to work together as a people, as a team, overcoming those curses by the Willie Lynch curse. And if we're going to build that next Black Wall Street, which we can do right here, have that Black Wall Street of Mobile, these organizations are going to be critical and key to the success of that. But you as individuals, that word of mouth marketing, that word of mouth advertising, you got to get the word out to help us spread it and enlarge our territories.
All right, excellent. Thank you for that, Mr. King. We actually do have two questions in the chat. I'm going to read them. The first one comes from Chandra. Chandra, thank you for your question. It reads, I have a Latino couple that's seeking financing for a startup company, but have been having issues securing funding through the SBA. The partnership was established last year and they bootstrapped to secure over $30,000 in equipment and need capital to secure the building. What would you suggest they do for funding qualifications?
Startup businesses are sometimes a little bit difficult to finance. Only about 8% of startup businesses get their financing from banks. Most of that financing will come from personal income, savings. There are angel investors and venture capitalists that are out there that provide funding for startup businesses and legitimate businesses that are growing. But I would say, if they are in the market, have them come in and talk to us, because if they've been doing in business for a year, that business plan of theirs is going to be critical, because that business plan talks about their financial objectives, their financial goals. It talks about the feasibility of the operation. And at Commonwealth, we look at those situations and not afraid to take a chance on some of those startup businesses if the numbers and the financials look right. Because the primary thing that we look at, people say that banks only lend money to people who have money. The reality is that we lend money to people who show the ability to pay us back. If there's the ability to pay us back and they've shown historical discipline in paying their bills on time, that's an opportunity or entity that we are open to looking at and open to helping. And if it's a realistic plan, that feasibility, that business plan is critical, because they say the 5 reasons for business failure is 1, the lack of money. They don't have the resources necessary to do things that they need to do or want to do with the business, because they're still working a full-time job and they can't go to mom and dad and get $20,000 to meet their payroll. The second is time, lack of time. Many businesses, new businesses, they're still working that full-time job somewhere else, so they don't have the time to put full benefit into their businesses. So lack of money, lack of time. The third one is a poor business plan. It failed to plan to fail. And by the way, the fourth and the fifth is a poor business plan. Because if you put a good business plan together, 1 and 2 probably are answered in that business plan, where you have the solutions for the time and the money. It's critical. Having that business plan is vital. So if a startup business, or a year-old business is kind of getting started, we're happy to take a look at it. Can't guarantee that we'll be able to do it, but if they're looking at SBA, I gave a presentation the other day. There is no shortage of money, just typically a lack of knowledge on how to get it. We'll be willing to work with them, send them our way.
Excellent. Thank you. And our next question is from the Secretary of the Board of Directors for the Black Chamber, Carlos. And Carlos asked, how many months do you recommend for an emergency fund?
You know, ideally, you know, if you go and look at the fully funded emergency fund, a fully funded emergency fund is roughly 4 to 6 months of your expenses. You know, but what we talk about is just a basic needs emergency fund. You know, so that $500, $1,000. I think, and I don't remember I don't remember the exact number, but I think it's like 60% of people, and I think it's actually a little bit more than that. If they had a $500 emergency, they don't have the resources to go get it. You know, so if you have that emergency fund, something comes up. You know, you have that dental expense or that medical expense where you have to pay the deductible. You know, if you're living paycheck to paycheck, because most people live paycheck to paycheck. You know, they say most people are 2 weeks away from a park bench, or 2 paychecks away from a park bench. If you miss 2 paychecks, how do you ever recover? If you get caught up in that credit card game and you start to fall behind, now you got that additional bill to pay along with the other bills that you were already having trouble paying. You know, how do you ever catch up? Something comes up, an emergency comes up, and you're already struggling. How do you take it from where you're already struggling from? If you've got that $500, $1,000 emergency fund, that's going to cover most emergencies that people experience. You know, I remember years ago, we had a pipe burst under the slab at the house. You know, that was $1,200 that we had to, you know, to pay to have them go back and fix that, you know, dig under the house to find that pipe and replace that pipe. So those emergencies will come up, you know, so having that emergency fund in place, it doesn't disrupt the household expenditures. So I guess a long answer to the question is 4 to 6 months would be the fully funded emergency fund, but a basic emergency fund of $500 to $1,000. And you can put that in your Commonwealth National Bank savings account, so it's not easily accessible with a checking, you know, as far as a checking account. Shameless plug, but that's what I do.
All right, excellent. Thank you for that question, Carlos. Anyone else have any questions? Anyone else? So one question that I have, I know you mentioned earlier that millennials, a lot of my generation are starting to like stray away from banks. And I think in part that's because of this decentralization movement with cryptocurrency and stuff like that. But I'm noticing some banks are actually investing in cryptocurrency. So I wanted to know, what are your personal thoughts, not Sidney King, president of Commonwealth National Bank, but just as a banking professional, what are your personal thoughts about cryptocurrency?
You know, it is something that is starting to take, you know, get some footprint going, and it is starting to take off in a lot of areas. I don't know enough about it personally. Haven't researched it enough to really give a solid opinion on it. But, you know, there have been a lot of things that have been trying to replace the dollar, and they've not been successful. But I think with this cryptocurrency and so many things going through the internet, cyber related, there is a future. It is something that I think will play a vital role in the future. I just don't know enough about it from a personal standpoint or a banking standpoint.
Okay, perfect. Thank you. Another question I have is with regard to whole life insurance. I wanted to ask you if this is in fact possible. So I spoke to a young man who told me that you can actually use your whole life, term life, I'm sorry, not term, like permanent life insurance policy as collateral to borrow from the bank. Is that true?
The cash value in your whole life policy, you can borrow against that cash value. But in today's society, with the rates where they are and the returns as they are, that's not going to build up that much. So if you got $100,000 policy that you've been paying for 10 years, you might have $1,000 worth of cash value in there. It's just not building up the way that it used to be. They used to talk about 12%, appreciation in those programs and those policies. Those days are long gone, and I doubt that we get back to there anytime soon. Hopefully, we don't get back to that anytime soon, because that would mean we have gone through a tremendous inflationary period.
Thank you for answering that. Okay, one more question. My next question is, and this is probably very broad, but for people who do like default on their loans and stuff like that, what, from your experience, is the common cause of that? Is it just purely like mismanagement of funds, or is it something else?
There are a lot of reasons that will cause a person to have, credit challenges and default on their loans. If you look at the causes of bankruptcy, medical expenses typically is going to be one of those largest costs that a person, they just want to, situation has occurred that's put them in a behind the 8 ball, and there's no way to recover. So that's the fastest way out. People have, I like to call them donut holes. Is when we look at people's credit histories. People lose their jobs. That affects their ability to pay their bills. People, get sick. They affects their ability to pay their bills. There's a divorce. It affects people's ability to pay their bills. So we look at those donut holes. Say, what did the person do prior to this situation? How have they handled things after the situation? And we make those individual evaluations on if this is a deal that we should pursue or could pursue. And I've had situations where a lady filed bankruptcy, but she needed a car. She was out of the bankruptcy at that point, but she needed a car. Well, the reason she filed bankruptcy was because her husband had gotten strung out on drugs, put him in terrible financial condition. But she had been working her job for over 22 years, professional job. She needed a car because she was the only provider for her and her son, and they needed transportation. We look at that situation, we understand that situation, and we make that loan. Had no problem making the payments. She paid it perfectly. But we look at each individual situation on an individual basis. Had people where there have been with the housing market is what we have gone through. They had to do a deed in lieu of foreclosure because they couldn't sell their house back in 08, 09. Typically a foreclosure is going to destroy your credit score. But we were able to help make that couple alone because, they had good income, they had good jobs, they had the ability to pay, but there was that donut hole incident that they just couldn't overcome at the time. So we look at each individual situation and see what we can do to help those individuals. But in some instances, you can't help them because there's a discipline problem, because you look back at that credit score and you didn't pay anybody here, you didn't pay anybody there, or this person filed bankruptcy 7 years ago, and now all of a sudden they're picking up a lot of new credit, going out and applying for all of these cards because that person is about to file bankruptcy again because you got to wait every 7 years. So you see certain things like that with individuals that you just can't help. We had one guy that because we turned his loan down because he had actually filed bankruptcy twice in the past. He was ready to sue us because we didn't make the loan. We turned him down again because his credit was good now, but the trend was there. What he was about to do. And you see all these little new accounts popping up all of a sudden. And now I want to buy my dream house. So I need you to finance a mortgage. Certain things that people are doing because you've seen the patterns and you see the patterns in their credit reports. So.
Well, thank you. That was very, very helpful.
All right.
Anyone else before we?
Well, I appreciate the opportunity to come out and share today. I hope it was something that was able to be beneficial to someone. And, we hope that you will be here when we do this again and support your local Black Chamber of Commerce. and help us grow, help us get it to become a powerful chamber of commerce, to reach its potential of becoming that powerful chamber of commerce that leads Bill into the next Black Wall Street.
All
Levy, you're
right.
still muted.
Well, listen, again, I can only mirror and what has already been said. Great presentation, phenomenal information. I'll just be honest, those who were unable to make it with us this morning, they missed a treat. They really did. And so we appreciate Sidney. We know we've had some people who've left already, but we will be doing this again. Sidney has always been very gracious and generous with his time. We, of course, expect that to continue. And I did want to say this to everybody. You know, there are only, I think, 13 Black-owned banks maybe in the nation. Sidney, correct me, but 13, 12, give or take. And we have one right here in our city. That is very impactful. And I'll say the same thing about Commonwealth that I'll say about the Black Chamber. If you are not a part of the Black Chamber, join. Help us be a solid organization. Join us. Help us to extend our resources and extend our reach. But do the same for Commonwealth Bank as well. Join. If you don't like them, then don't go back to them. The same thing with the Black Chamber. But give these institutions an opportunity to show you guys that they're valued and valid, incredible organizations. So I know I speak about doing things that we should do a lot. I finally did open my account with Commonwealth. I'm very proud of that as well. Should have done a long time ago. So I was late to the party, but I apologize. But I challenge everyone, if you are not banking with Commonwealth, let's support this institution. So again, Sidney, great job as always. And I'm sure Maria is going to put this up so it's publicly being able to be publicly viewed as well. And we'll work on doing one of these again. But again, phenomenal presentation. Thank you all for being here today. Thank you, Sidney, for an impactful presentation. And I'm confident that we'll have more people joining us the next go round that we will begin planning here very, very soon. I'll turn it over to Maria and we'll go ahead and adjourn for the day. Maria.
Yes, I mean, again, just, thank you so much, Mr. King. This was really informative. Definitely looking forward to having more of these in the near future. Maybe we could do something every month, once a month, just putting it out there for consideration. And for those of you who joined us today, thank you as well. Thank you for spreading the word, sharing the flyer on your page. And we look forward to seeing you in the near future. We have the general body meeting that's coming up next week at Hank Aaron Stadium. It's on Wednesday, the 24th, I believe. That's the 24th. And we start at 10:30 a.m. I don't know why I'm all off this morning in terms of time. So please join us for that. We will actually have another Sidney presenting there, Sidney Rain from SWAPTI. And so he will be discussing 11:30. I'm sorry. Thank you so much, Levy. He'll be discussing some of the amazing benefits that business owners can leverage to basically expand their labor force. So you definitely want to come to that meeting and hear what Sidney Rain has to say. So you all have a great weekend. Stay safe, stay warm, and we look forward to seeing you again soon.
All right. Thank you.
All right. Thank you. Bye-bye.